Hello, Investing Putts back with you for the weekly update. Um, I've had a pretty bad month of April. I'm glad it's over. Since peaking at more than $28,000 on April 6th, my portfolio is down 5.2% to about $26,600. During this time, the SPY has continued rising steadily. It's hard to beat the index. So what went wrong? My biggest loss was on my poor man's covered calls on Intel. Intel dropped 15% after earnings. I also made the mistake of buying some short duration options and some debit spreads due to the low implied volatility. The IV is still low, and I lost money on all but one of those debit spreads. So I think I'll stick to selling premium. So here's a list of the current holdings. This is unchanged. I'm trading the poor man's covered call on most of these stocks, meaning that I have a bullish short to medium term outlook. I'm short term bearish on the oil and gas sector, so I'm trading the poor man's covered put on Occidental Petroleum and Schlumberger. I'm trading neutral defined risk strategies such as the iron condor on US Steel, and I've done really well on that one. So Intel, it's a pretty expensive stock. So when I bought the $50 strike leap option, it was a pretty expensive leap to purchase. But anyway, I've been selling covered calls against that leap since March 26th. Intel has fallen about 15% from its peak of $68, which most of that drop came in the first quarter of 2021 earnings call. So if you look how it's performed in previous earnings, it was pretty predictable that it was going to drop. It's done a look on this plot here. Every single time there was earnings, it fell by 10 to 20%. So anyway, I probably should have sold my leap and waited to re-enter. I'm still bullish on Intel, and it always seems to recover after earnings. So I'm going to hold on, at least to the next earnings. If you follow oil and gas stocks like Occidental Petroleum and Schlumberger, they were way up from their low point in November 2020. But in late March, they broke below their 50-day moving averages. I'm bullish on commodities in the long term, but I decided to take a bearish trade on Oxy and Schlumberger. I bought in-the-money puts expiring in 4 months and started selling covered puts against them. That's called the poor man's covered put strategy. Of course, now that I committed to the poor man's covered put, both Oxy and Schlumberger are retesting their 50-day moving averages to the upside. So on Oxy, I bought the August 20th expiration 32 strike put. When I bought it, the delta was about minus 80. Now it's about minus 70, since the stock has gone closer to the strike price. Since I'm not sure if the bearish trend will continue, I'm hedging my bets and selling aggressive short puts. For example, I sold a $25 short put expiring on May 7th, which is only about 1% out of the money. I'm usually 2 to 3% out of the money when I sell covered calls or puts. So this short option has a plus 40 delta. So my net delta exposure is minus 30, which is mildly bearish. If the bearish trend resumes, then I'll move the strikes of these puts further out of the money. If the bullish trend, if we go back in the bullish trend of earlier this year, then I may just go back to the poor man's covered call. So the last one I'll focus on is US Steel. It's been a great performer for me. I really don't want to own this stock because I think it's overpriced, but the options premiums have been pretty awesome. I've been selling defined risk strategies, mainly vertical spreads, some naked puts, and some iron condors. Believe it or not, I've won these bets 20 times in a row without a single loss, which is pretty amazing. In the 2.5 months I've been trading US Steel, I've made $427 in profit. So if instead you would have bought 100 shares of US Steel stock, you would be up by $550. But there was a lot of volatility to get there, and we may still have more volatility. So the lower volatility from selling options is pretty striking. So anyway, that's all I have for you this week, and would love to hear your comments. And maybe your reassurance. Tell me that I'll have a better week next week. Anyway, that happens, especially when you're trading. That's why the premiums on the SPY are much lower by percentage. It's less volatile. Yeah, you average 500 stocks together, they're going to be less volatile than single stocks. So I got burned by the single stock risk this week. See you next week.